G'day everyone, welcome back to Pete's Investing. Today is April 20, 2023. This is the spot silver price update. You can see here on the all time frames, the daily, the 4 hourly and the hourly, they're all in upswings according to the CCI with a moving average 400. But just be mindful, we're now broken down through the moving average on the hourly chart, and we may start to see a bit of a retracement to the downside in the coming days, possibly. Let's drill down to each of these. So first off on the daily, we had a nice move to the upside in that range there since early March, and now it's hit this resistance at 2607, and it's bouncing down from there, and it's currently reached, with its wick, it's reached the 23% retracement, the Fibonacci retracement. We've also got this support level at 1991. I'm going to keep that there for the moment until that changes, and when that changes and it confirms, I'll let you know. We've also got these two diagonal trend lines between those highs and those lows, so it may well possibly gravitate around those or bounce in there for some time. We'll just keep them there for the moment. On the 4 hour chart, a couple of things to notice here. We've got this separate diagonal trend line. It was nicely gravitating around that for some time, and then when it hit this resistance, it bounced off and it's now moving away from that. I'll keep it there for the moment because if it does break to the upside, it may actually come back towards that trend line. But also notice, just a bit for those new to divergence and trading, we've got this divergence, this bearish divergence, which means the CCI is going in a bearish move versus the bullish divergence on the price chart. And what that generally means is that they, not always, but generally they play out. So when it breaks out, you can see they break down from there. The CCI as well turned to the downside and continued its downtrend, and the price collapsed, and you would have had a nice little short trade there had you caught that early enough and traded it. So just be aware of those divergences where they happen. At the very least, be aware that there may be a potential trend reversal, but more often than not, they're just simple little corrections, and then they move further back to where they were going originally in terms of the price movement. On the hour chart, I've got this Fibonacci drawn in here between the support at 1991 and resistance at 2607. Now you'll notice it's actually bounced off the 23% level of the Fibonacci, so it's a very minor retracement, nothing to be concerned about, but just be mindful the CCI has broken through its moving average and it's threatening to turn red as a downswing. So if this continues to the downside, we will see this further decline and be more a potential bearish outlook. But we're not going to panic yet. We've still got a bit of way to go. That 61% is always our key area of concern. If the price breaks below that 61% retracement, that's when we're going to have more of a bearish outlook in terms of price correction. At the moment, it just could be a bit of a retracement. At any one of these levels above the 61%, it could always bounce to the upside and continue an upward momentum. So to understand how to properly trade this, I've also got some fractals in there. So this would have been a nice little area to go long. So when the CCI is consistent across all time frames, the hourly, the 4 hourly and the daily, then you can take, this is just one trading idea, whenever the bar breaks above the fractal, you can go long and take a little trade or little profit. It could be a monetary or a percentage gain. So that would have been one little area to go long there. Another area would have been there. So I like taking little incremental gains. I don't try not to hold too long unless you're trading the 4 hourly or even the daily. So it depends on your trading style. Take profits based on your trading style. To understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like more on Patreon to support us. Thanks for watching, and see you in a future video.